Alrighty, traders, welcome back with another session here with the FX Big Dog and my panel, Chris and Tyson, for Ask the Analyst. The AAA session happens every Monday. Hopefully you guys are come prepared, ready to rock and roll, have questions for us. The chat box is ready to take questions, so go ahead and make sure you post your questions in the chat box. We're going to be talking about a bunch of stuff today. We've got rate decision coming out for the Swiss, the pound this week. We've got Aussie data coming out. We've got a lot of discussion around the COVID-19 and how it's affected the market, as well as the stock market. Tyson's going to be talking about that today. We've got a lot of stuff to talk about currency pairs that we followed last week. Chris, Tyson, myself, still going to go ahead and discuss what our plans are based on the currency pairs that we spoke about last week. So a lot of good stuff to chat about. Hopefully you guys are ready to rock and roll. I'm certainly ready to rock and roll. You see I'm pumped up like crazy right now because there's a lot to chat about and we've got 30 minutes to go ahead and do that. So before we get started, before I forget, let's go ahead and first smash the like button. Smash the like button if you haven't done it already. Let's go ahead and smash the like button. Subscribe to the channel if you have not subscribed yet so you can get notifications of when we go live, but also making sure that you guys put comments in the comments area in this video so we can go ahead and address that throughout the week. Without further ado, let's go introduce the panel, and I'm going to go ahead and introduce Chris first. Chris, how are you doing?
Doing great, Gary. Nice to see you on this early Monday to kick off the week, and Tyson as well. It's going to be a good session.
Tyson, how are you doing, buddy? Muted mic?
He's miming.
I always do that. It's going well other than my ability to control my mute. So other than that, everything is good. Looking forward to a great session.
Fantastic, man. Great stuff, guys. I'm going to just drop my volume just in case there's some volume coming through on the other end. Just drop the volume a little bit. All right, guys. Well, listen here. We've got a lot to talk about today, specifically about what's happened with the market based on the COVID-19. Stock market had dropped Thursday. We saw like an 1,800 point drop on Thursday. Recovered a little bit on Friday. Tyson, give me your views. What do you think about COVID-19, stock market, and safe haven currency pairs that investors are running towards right now?
Yeah, I think the market's I think it's pretty simple. It's in a prove it mode where, we've rallied up in all of these risk assets. The stock market's rallied towards, highs. The Aussie pairs, oil's reversed, all this risk on stuff has reversed and went well. Now it's to a point where it's like, okay, now you got to prove it. We're starting to open up more. The economy's starting to open up, and that's a good thing as long as we don't go back into another shutdown. I still predict we're not done with seeing some of the nastiness that we've experienced this year. I'm convinced of that. I hope I'm wrong. But the market's in a prove it mode. And I think what's going to happen because we've rallied up so aggressively, days like last Thursday, days like today, I think we're going to bump around at a top. I think we're going to float down until we start to get some earnings coming out, until we start to see some fundamental data coming out over the course of the next month and a half, 2 months. And then it's going to be interesting to see where the polls and where the momentum takes us into the election. I think that not to get political, but I think the reality is a Biden presidency is going to take probably $15, $20, $25 of earnings power away from the S&P 500, which means the stock market's overvalued if Biden gets elected. And why would that be the case? Because we're going to have higher taxes. We're going to have, there might be some good or bad with that, but these are things that we need to pay attention to. I believe the market is priced for perfection. Here's the one thing I'll say. There's not a person in this world that can convince me that a stock is worth the same value today as it was January 1st.
Yeah.
So,
I agree.
And a lot of stocks are trading at the same level they were trading at January 1st. So therefore, we're overvalued.
Sure.
Or
Absolutely.
Higher. Yeah, exactly.
in the event of some or higher.
Exactly.
So I'll continue on that.
Yes.
I just finished my weekly outlook, and I kind of used the phrase like, I hope we don't relapse Like, if we learned absolutely nothing for the last 2 months, it's like that's great that the world is starting to reopen and they've loosened restrictions on quarantine. But one thing I keep looking at with that Johns Hopkins website is like our trajectory of our COVID cases continues to stay the same. And now these hotspots emerging again post Memorial Day. And again, you can't blame Memorial Day, but I think it's the reality is like if we didn't learn anything for the last 2 months with seeing all this shutdown and the severity and the seriousness of stay at home, social distancing. It's like, look, I'm all for like sports coming back, and it's like I watched golf this weekend, live sports. It's great, but how do they do it with no spectators? You've got basketball around the corner. It's like you've got all these professional sports willing to come back. You've got the big question mark of colleges and college sports maybe coming back in the fall. I don't know how if we just exist like it never happened. It's like, yeah, it's great that the stock market can price in like, oh, that was a really ugly March, but here we are getting it all the way back. And I think that, I said this when we were in May. I was like, if you had March to do all over again, would you trade it the same way? And I'm just thinking like, okay, so May wasn't a sell month, right? May wasn't a risk off, but now we're starting to see after last Thursday, the market has that tendency of we could have a really aggressive down day. And you saw a big spike in the VIX. You saw a big sell-off in the stock markets. You saw a big drop in like a perfect, kind of poster of risk on versus risk off trading, where risk off currency pairs were really, really strong. And, I don't know if we're necessarily saying last week was the top, but I just don't know how we can keep ignoring what is potentially happening right now with like an increase in COVID cases. And if these increases continue, then they run the risk of overrunning hospitals, overrunning what we're capable of. And the whole point of what we did 2 weeks ago or 2 months ago, which is shut down everything and try to, not overwhelm the system. So it'd be embarrassing globally if we just don't learn from this. And I understand that there has to be a new normal and there's new protocols that we have to adhere to. But I think that the market has done everyone like a great service, but also a disservice, because it just made traders almost complacent. Like, hey, this terrible thing called coronavirus and this terrible thing about like the stock market at all-time highs, like Tyson said, there's no way that I could be convinced that I'm going to buy at these levels. And the crappy part is I don't want to feel like I miss out. Like, am I missing out if that's the low? It's like, I just don't believe that's the V bottom. I think we are in a U-shaped recovery at best, and it's going to take time. Like, there's going to be a lot of volatility, a lot of uncertainty going now until the election. And you're right. I think, whether Trump wins or Biden wins, and again, I'm not going to be political here because I don't really care. I do care what the markets do. I think that the political event of the U.S. election will be a major catalyst for us to trade it, whether that's good or bad, but we should be able to make money with it.
Sure.
But there will definitely be consequences, positively and negatively, for who is our next U.S. president.
Yeah. Can I say something real quick, Gary? Because you said something so important there, Chris. You said, I agree with you. I don't want to miss this move. What if we don't, sell off the 15-20% that I think we're going to have a sell off in the market? What if that doesn't happen? Then I miss the move. Here's the way that I'm planning on trading. I want to trade up in quality. What I mean by that is, but I want to trade up in quality with a hedge. So, I don't know if anybody, maybe there's a lot of people, there obviously is, but I don't personally know of anybody who shops on eBay. Maybe people do. Maybe people still use eBay. I don't. I go to Amazon. And so what I would rather do is I'd rather buy Amazon and short eBay, because I think eBay is substantially overvalued. And I think if the market falls, Amazon's going to fall, but eBay is going to fall further. So it's a hedge. So I'll make money if the market goes down. Hypothetically, I'll make money if the market goes up. I think Amazon's going to outperform on the upside because it's just a better company in my mind, and it's stronger financially. And eBay is substantially overvalued right now with a ton of debt in my mind. Actually, in reality, has a ton of debt. So again, short eBay, long Amazon is a way that I'm going to limit my upside, because if we rally, I'll lose money in eBay, make money in Amazon. But if we sell off, I make money in eBay, lose money in Amazon. Overall, as long as we just get the movement, I should be able to make money with something like that. Yeah. We could also do the same thing, buying Facebook, selling Twitter, buying Uber, selling Lyft. I like those pairs trades like that right now.
That's really interesting, because that goes along with what we talked about in these sessions. And as a team, it's like we talk about this competitive advantage. Who has the moat, who has the competitive advantage, who will be able to come out of this stronger and probably absorb. Like, anybody that's not going to come out of this stronger will be absorbed or will probably suffer and ultimately fail. I mean, we haven't really seen the realities of bankruptcies. I mean, we saw that Hertz filed for bankruptcy, and then their stock jumped like I don't know, 100%.
Yeah.
JC Penney filed for bankruptcy, and it's like those. Tyson, I want to get your feedback on why are Robinhood traders being blamed for this crazy stuff in the stock market, because it's almost like Wall Street is playing a game with the order flows that Robinhood has, right? It's like you've got market orders that people are putting on their phone and jumping in and chasing price action, and it's almost like they're saying that Wall Street is using it as a game to just prop up levels and just pretty much screw the retail trader. But I see that Robinhood is making a lot of headlines, and it's like Robinhood is kind of the pioneer of this, like at your fingertips, commission-free trading that disrupted a lot of major brokers. But you've got Webull, you've got like 5 or 6 other platforms that do the exact same thing.
The reason why is because Robinhood is dipping into the manager's money, and the individual is outperforming the manager right now.
Yeah,
and they have to beat up the individual and say, you suck, you can't do this, you got to give your money to me. Yep. And as professional traders, we know that isn't the case. So they want to try to do everything they can to beat up the individual investor. But right now, listen, you look at the performances, and mom and pop are outperforming the hedge funds because they're more nimble right now. So continue to do what you're doing. So I think it's unfair, but I think it's obvious what they're doing too. They're trying to talk their own book and trying to get back their assets under management.
Sure. That
All
makes
right,
sense.
so guys, just like you have competitors in the stock market, we've got competitors in the currency market. If you actually look at the way the markets are moving, you've got 2 currency pairs or 2 currencies that we're trading as a pair, and one is going to get stronger than the other, right? So there's some competitiveness there as well. And it's all based on what's happening in that country. So if we go back to what Tyson, what you mentioned about risk on, risk off type of currency pairs, we definitely have a lot of risk off right now. Currency pairs that are moving the market and moving a pair in a direction. JPY strength, US dollar strength. We got Swiss strength. If you actually take a look at the dollar index right here, I'm going to flip over the chart, and you'll take a look and see this is the dollar index I had set up right here. If I compress the charts, we spoke about it last week, we have the market setting up with a very, very strong trend. And that trend line is holding. In fact, if I go ahead and move it to more of a longer period, take a look over here. We've moved that trend line all the way from the bottom right here. It's holding at support right now. This tells us that dollar is going to start thinking about rally. In fact, we've been talking about rally over this last couple of weeks right here. As price came back down to support, we said we're going to hit support, we're going to see a rally. Now we did see the rally. Price is a little bit sideways at the moment right now. You see 2 indecision candles taking part right now. We had it on Friday. We had once again here today. Today's not closed out yet. We can still see some bit of movement coming out in today's trading, but we could see price moving all the way to the top right here. So we could see a continued rally of dollar all the way to the top. If we go to the 4-hour time frame, we did see the divergence taking place, actually convergence right here. This is just a correction move as price goes back up to this monthly target here further up north. So there's definitely eyes on a full, or at least a bullish move to the upside. Now, with that being said, what are the pairs that you're focusing in on this? I'm going to go to Tyson. What are the pairs that you're focusing on that's going to be affected by the dollar index this week?
Yeah, it's interesting. I was just I've got a session coming up this afternoon with our anniversary event students, and I was just kind of walking through or going through some of the currencies I want to talk about. And it's real simple for me. I have one of my favorite, and I'll talk about that here in a minute, but I would buy the dollar against everything except the Swiss and the yen right now. And maybe not right this minute. I think what we're seeing today, this kind of reprieve in the rally, it may last another day or two, but I think we're setting up for that next really nice run. So I like the dollar against the pound, the euro, the New Zealand, the Aussie, pretty much the CAD. All 5 of those. The only 2 that I would avoid is the Swiss and the yen, just because they have more of a risk-off appetite than the dollar does most of the time. So, but my favorite trade right now, or one of my favorite trades, is one that I've been talking about for about 3 weeks now, and it's the Aussie dollar. It's finally starting to pay off, and it's finally starting to come down in those levels. Last week was a good week, kind of made up for some of the drawdowns that we were going through. I think that I've kind of been updating my targets on the Aussie dollar, on where I think we could end up going. But right now, if I had to make a decision on when to short right now, if I weren't in this trade, I think we can probably get back up to that 69.30 area. And then at that point, I think that we're going to put in kind of a top. I think that we're forming a top around there, and then we're going to flush down again. And I actually think that we could potentially see price go all the way down to 61, possibly. I don't know if we're going to get all the way down there. That's not my overall target. I've got a kind of a target one at 64.50 or so. I think that's a very doable, very hittable target. But I'm going to see how price responds around that level. And if we continue to see some weakness come in, I think we could head down to 61 before everything flushes out. So, because I see similar patterns, if you look at the correlation between stocks and the Aussie and all of these ETFs in the Aussie, I see very similar patterns. And again, I see probably a 15, 20, 25% sell-off in the stock market, which again would probably put the Aussie down to about 61, just based on correlations and calculations. So I really like the Aussie dollar short. I wouldn't jump in it right now. I think we're going to rally up another 60 pips or so, and then I would start to look to sell.
Okay, so I have a couple of questions right here. Obviously, if I go ahead and take a look at the chart right here, you can see a level at 0.6817. That level came off a low right here, and it seems to be staying above that. Also, we've got this downward trend line that also seems to be holding at support. Is this of any concern to you? And if yes, what are you waiting for to confirm that we may be trading below that level?
Yeah, it could be. If you scroll back a little bit, I like the trend line that you have there. But if you scroll back, I actually would connect, instead of going all the way up to that top, come down a little bit on and connect all of that. And so, from my perspective, we've kind of broken through it, and I think we're going to kind of channel to the downside. I don't know if we're going to have an aggressive move to the downside, but we're going to channel to the downside. And again, I think I'm going to temper my enthusiasm on my targets. That's the reason why I have a 64, 50 target. But honestly, I'm going to probably look at how price responds even around 67 or even 65.50. Again, I don't think we're going to fall like a butter through knife on this, but I think we're going to continue to trend down. So kind of that channel you see right there with the two trend lines, kind of converging a little bit or diverging a little bit. I think we're going to float within that channel in there, if that makes sense.
Okay. I do see, if you go down to the 1 hour time frame, and you know me, I like to look at the pivot points. Yep. And if price trades below the pivot points, we're in a bearish trend. So right now, I do believe that, yes, I agree that we do see some bearish trending at the moment right now, where the short-term, long-term doesn't really matter, but we're bearish at the moment right now. And that little rally that you're looking for could probably take us back up to this price at around about 69.09. And that is, I see that about 40 pips, maybe that 60 pips that you're looking for might be a spike above that, and then a continuation to the downside.
Yeah, also, and if you look, we have a missed target back that we could actually target back there. So that could be great, where we start to sell at this week's target, and we target last week's or 2 weeks ago's target.
Yep. And also take a look over here. If you look at the swing, right now we have a nice little downward fib swing. Price came off the 382 bounce. It may want to go ahead and retest that high, creating what we call an irregular flat. That is a Elliott wave structure. And then turn around and head back down south to the 1.6 right down here, which is right at that missed target. Yep. And that's a 66. And that is just the beginning of what we could still see as maybe a further move down. I think you said 61. Is that what the number you're looking at?
61 would be kind of that if we continue to see a big flush in the markets, that would be kind of my overall target. But, we're going to have to clear 65 first, 65.50, 64. 64.50 is kind of where I'm going to probably take a big chunk of my profits off the table.
Okay, cool.
Yeah.
We got a trader that says, hey, I have one question. Go ahead and throw your question in. We'll get to that question as soon as it gets posted. So go ahead and post that question. And then, go for it, Chris. Real interesting what Tyson said about what he's looking at right now. I know you're looking at some pound crosses, right? Pound Aussie, pound New Zealand dollar.
Yeah. So just to put my 2 cents in with Tyson too. We took some. So last week to me was kind of the start of the counter trend move. We saw an aggressive Aussie for April and May. A lot of that risk on trading through April and May. We finally had the timing. We finally had the tops and bottoms that provided some really nice short-term corrections. So last week for myself and traders in my trading room, I was really protective of that first leg last week, and so I was thankful that Thursday came in as aggressive and as nasty as it was, because Thursday and Friday for us were paydays. We had a lot of profit on Aussie Swiss, Aussie yen, CAD yen, Euro yen, pound yen, Aussie Swiss. I think I said that, New Zealand Swiss, New Zealand dollar. I mean, we had all of our kind of risk off type behaviors with robots running, and I wanted to make sure that we got paid on that. So Thursday, Friday, we protected profit. We had a great trade running on the dollar CAD. We added a bunch of positions to it. We ended up closing from over 400 pips in like 3 days trading after FOMC. So, I mean, last week, like, we were ready. The three of us have been talking about this risk off type environment, and we finally had it within like 48 hours. Like Wednesday's close to Thursday, Friday, it was like risk off across the board. And we had some really nice payouts if you're protecting profit. So going into this week, I happen to like the pound Aussie and the pound New Zealand for the same reason. I mean, the same reason we're looking for risk-off trading. I think the Aussie is probably going to be one of the more vulnerable currency pairs in a risk-off environment like it was back in March. So if Gary brings up the chart for the pound Aussie, we have, the pound Aussie is a really clean trend line break, in my opinion. So we've broken, the right side of the trend line on that pound Aussie. We talked about this last week. It's just got retracement written all over it, correction written all over it. And I think a safe level would be we break the right side of the trend line. We either look for, bullish confirmation to continue to take it up higher. One thing I always look for with these trend line breaks is a double bottom or a slightly lower low identified divergence. And then I'm looking to buy that low as possible. Levels that I like for this, I've got robots that are already running to go long, and I'm trying to trade it back towards a previous low around 1.90. Truthfully, if I get back to 1.89, 1.8950, I'm going to start trapping those profits into that 1.90 round handle. And that's what we did last week. As we were getting into some profit zones, we were getting close to some of those, daily pocket levels. And I just issued like, hey, I'm closing the trade. I want to take profit, get paid. We had a lot of traders with some personal bests last week, 1,000 plus pips. We had a trader over 2,000 pips last week. For my little cash in on the dollar CAD, I mean, myself, I even made 1,500 pips last week. So I think that we're going to continue that kind of trend for this week and kind of look to see where we can deploy some robots again and see what we can pick up in the near term. But trade like this, I think pound Aussie has more upside direction. And what's that target at there, Gary? What's that target at for that pound Aussie? I think that's a good level to also watch this week. I think that will definitely get hit.
The one for this week is going to be 87.84.
Perfect. I mean, that's great. And like I said, that's conservative, right? Like I would love to take it up to, I'd love to take it up to 1.90, but right there, it's like if we have, 400, 500 pips to the upside, I would love to have that direction play out and just stay bullish and have a nice little system trade to the upside and make it worth our while. So pound Aussie is a really good one. Pound New Zealand is very similar. Right side of the trend line, looking for some more structure. We have some really good support levels right in at 1.9400 on that pound New Zealand dollar. And, Gary probably has some really good targets up above. I happen to have a nice pocket around 9,800, and I'm looking at that round number around 2.00. So I like the direction to stay bullish only, look to trade bullish only. Right Trader Max is going to be a system that's helping me and the traders in the room. We can also look at some shorter term systems that anything that's an aggressive trend trading strategy, you deploy it bullish. I think it looks solid to go up towards 9,800 to 2.00.
Okay. And my thing about these two pairs, the only question I have for you on these two pairs is I've been looking, and let me see if I've got any open positions currently right now on pound. Let's see here. Pound Aussie. Yes, I'm buying currently right now on pound Aussie. So I'm definitely in on pound Aussie. And let me see pound new. There's another trade on pound Aussie there as well. Let's get the symbols together. So we got pound US dollar, pound Aussie. I don't have any pound New Zealand dollar at the moment right now. But this is the question I have for you right here, Chris. I'm looking at the divergence, right? And I'm also looking at these targets on the 4-hour time frame. So I'm looking at monthly targets on the 4-hour time frame, and I'm looking at the divergence. I'm seeing the divergence taking place all the way down here at the bottom. We had a little bit of upside move. But then if you actually take a look right here, we're now getting price moving higher and now the momentum moving lower. So we're looking for another bottom to take place again. And if we do get another bottom, it means it has to go ahead and actually take out the low right here. So which means traders that have got in on the pound New Zealand dollar, if their stops are just below this level right here, they are at risk for a possible price drop below that. And it may just be a spike or so, but you see right here, here is that bottom that we've got right here. And in order for price to go ahead and create another convergence level, we need to take out this support right here, price drop a little lower, and then momentum to continue north. So I don't know if the pound New Zealand dollar for me is ready to rock yet. That's probably why I'm not in on trades. And I may have been in on trades and taken some losses on the pound New Zealand because I am a buyer on pound and New Zealand dollar right here. And I'm looking at trading this on the 1 hour time frame. Let me see if I would have picked up a trade. And yep, nope, no trade yet. So my 1 hour has not been confirmed yet to say that the trend started to take off. I trade the 1 hour time frame when I looked at sort of like a trend-based, strategy. And I'm not seeing the confirmation on the daily, but I don't have the 1 hour confirmed yet. Are you already starting to get in on the pound New Zealand dollar yet?
Yep. So I have it. I have my robot set up. So I need confirmation at least on the 15-minute chart. So right now it's, I think we had like a false confirmation last week. Not false. I mean, I just didn't jump in and protect it. So I did take a small loss, but I'm getting back in with a slightly bigger trade size, and I'm looking to stay long. So here's what I'm doing. My mentality is my robot will end up taking all the abuse, not me. My robot, if it takes any losses, they'll be small, they'll be manageable. And then when I'm right and the direction does pick up and go to the north, then I can step on the trade a little bit more aggressively. I can increase the trade size and I can add on trades. Like right now, I'm taking one trade at a time and keeping the trade size very small. When I have the right direction, we start to see more evidence that it's going north. Then I increase the trade size, increase the add-ons, and we start playing to the direction that we just talked about.
Okay, fantastic. Now the pound Aussie, similar question on the pound Aussie right here. If you take a look over here, we're definitely at the bottom. I'm definitely in. You can see I'm in on a few positions already now long. In fact, I've got 2 buys in already on this. I'm not in the money on both of them. Small positions I've taken on this right now. But if I look over here, this is my concern about the pound Aussie right here. If I look at the 4 hour time frame, the 4 hour time frame shows that price is not really taken off yet. And we had this big divergence setting up right here, but now we have, or this convergence, now we have divergence, which means a sell-off, which means we're probably going to come back down to support down here, which questions whether or not we're seeing strong Aussie, which I doubt. I think Aussie can continue to weaken this week. But then again, we've got the news coming out on Wednesday, and that may be a turning point for the Aussie. But it could be the pound that's driving this back down south. Maybe weakness out in pound that's going to drive us back down support right here. And I still feel very strong about this pair rallying up. And the reason why I'm doing that is because, and I think just like you, we're right at the support right here. There's got to be some rally. There's got to be correction. The market's screaming correction, correction. We should see a correction taking place and moving back up right here. Now, if that's going to be the case, then we should be a buy in the market. Is there any concern based on these factors, or you're approaching the trading just like the pound New Zealand dollar?
So I think of it this way. If I had to pick the best spot to buy, it'd be at the same low that we just saw. If I had to pick a level that I want to buy at, we saw lows on June 2nd at 1.81 or 1.8060. Gary, if we come back down to retest that low between 1.8060, 1.80, the round number, I'm looking to buy. I would look for a bullish confirmation on small time frames, try to turn the corner, whether it's equal lows, slightly lower lows. I mean, we see so many times that the market breaks a trend line, pulls back and retests the backside of it, pulls back and retests the same low. I mean, I'm looking for bullish confirmation. So I think if you were not putting a system on, you could look at the backside of that trend line. You could look at the same round number or the same support level that we had to try to buy really low. And, more than likely, yes, we have a lot of high impact news this week. Yes, we have Aussie news. Yes, we have pound news. But how many weeks have we been talking about, there's news, but yet if we follow the technicals, we get paid on those technicals. So if I were to pick the direction this week, I think if I buy it nice and low, my probability is I'm going up on the pound Aussie and likely going to get paid being bullish on that currency pair. So I think systems make it easier as long as you have good equity management, so your system can trade, have a little margin for error in case it gets knocked around a little bit, which in this case it might. But I think once we're right on direction, we can increase the trade size, increase the number of trades, add on manual trades in addition to it. Something I've been incorporating a lot more of. And one thing I'm going to do a quick plug for is the anniversary event. One thing I think a lot of traders are interested in is how we do a better job of adding to winning trades. We've taught a lot of methods on adding to drawdowns and managing positions and leveling into certain strategies. But I think what's helping me a lot for keeping the risk small and keeping my profits nice and large is when we have direction going our way is the willingness to add to winning positions and knowing that we have a really nice destination. So if I'm going to 1.90 on the pound Aussie, I mean, if we get filled at 1.80, we have 1,000 pips to the upside, and we can add multiple trades as it's going up and price confirms for us. So we should be able to turn that into a pretty nice profit.
And I think more importantly, I think learning how to take profit, that's just one thing that traders do struggle with. Adding on position is fantastic, but if they don't learn to start taking profits at certain levels, they just leave all that profit on the table, and the market just takes it all back again. And that's the worst thing a trader would ever want to experience, right? We've all been down that road. You deep in the money, and then you're like, oh, it's going to go an extra 100 pips, and it doesn't. It goes to extra 200 pips down against you. And then you start saying, oh, now I need to start getting up because now the nerves start kicking in, and you start taking out profits a little bit early. So teaching them about how to take profit is important as well.
Yeah, real quick on that too, Gary. That is so important. And so here's what you could do, traders. You can have the long-term viewpoint. Let's say your long-term target is 500 pips above current price, and your trade is now up 150 pips. We're like, I'm not to my target yet. I can't take the trade off. Well, yeah, you can. Remember, our job is to buy low and sell high. So let's keep our original thesis in play of I'm going for these 500 pips, but let's book the 150 pips and then get back in lower. Book another 100 pips, get back in lower. And instead of making 500 pips on that rally up to your target, if we get there, you might make 1,000 pips because you were able to manage it all the way up to those levels.
And that's trading Fibonacci's is helping you with that. Trading any sort of system that gets you into trades, takes you out at a profit level, and then waits for correction moves and then getting back in the game. So you're really talking about like a Fibonacci type of trading strategy where you get in on retracements and then take profit at those extended levels.
Exactly. Yep.
It sounds good. All right, guys. Well, I'm going to go ahead and I need your comments around this. I'm going to focus back in on the Euro New Zealand dollar view. If you watched the session last week, Monday, I spoke about the Euro New Zealand dollar. I said, man, I am a big buyer on Euro New Zealand dollar, also because of the fact that we're expecting some weakness out of dollar, and strength out of dollar. And I did say that the Euro New Zealand dollar definitely moves in the same direction as the dollar index. And we saw some rally in the dollar index, and we saw the same thing happen on the Euro New Zealand dollar. Let's go take a look over here on the chart on Euro New Zealand dollar. This is my 2 cents on this. And I'm going to go to the, let's pull up the daily first. So we hit the bottom of this downward trend line right here. We saw a nice little turnaround. What was the Monday's date? Can anyone remember what is today's date? Today is the 15th, so it's going to be the 7th, right?
Yes.
8th, my
7th
bad.
and 8th, yeah.
So the 8th. So the 8th, let's take a look right here. This is the day right here. This is the 8th. So that day, this candle was still active. So we saw price touching the bottom of the trend line right here. And I said, listen here, it's time to start looking to buy. And I said, I'm going to go ahead and be a buyer because we also found that the price went ahead and created this beautiful divergence right here. And also, we got to this monthly target. So we had a lot of reason why price would be bouncing off this level. So we had a missed target hit. We had a nice little convergence level setting up right here. We have a monthly target to the upside that hasn't been hit. It's the unhit target for the month. And so we started seeing the rally taking place. Now, traders have made profit working their way up. So this is the reason why I'm still a buyer in the Euro New Zealand dollar. I had a couple of questions in my earlier sessions on some traders, and I've got some questions in the trading room. Are we still a buyer in Euro New Zealand dollar? The answer to that is yes. We're a buyer in Euro New Zealand dollar for this reason. If I go ahead and take a look at the fibs right here and I deploy it going up, notice that price has gone ahead and created a retracement move at around about the 50, and extended all the way to the 1.618. So what happens then? We create a new AB boundary. Now, a new AB boundary is creating a retracement move for this current move right here. You can see right here, we retrace it to retest what we call a wave 1 structure. So it's come back to retest it. We bounced off. This is a good place to be a buyer in the market. Why? Because now we're chasing after not just this 1.27, but we're also chasing after this monthly target. So we've got at least a bare minimum of about 260 pips to go before we hit this 1.27. Why is this important? The 1.27 is what we call our fifth wave extension in an Elliott wave structure. And so we're looking for price to move up to about 260 pips to that level. This is the reason why I'm a buyer. So what can affect this pair this week? This pair can be affected by dollar movement. What are we expecting? Already I've spoken about COVID-19. The numbers are spiking up. We don't have any, I don't believe we don't have any US data other than a Fed chair that speaks on Wednesday.
We got retail sales, but I believe.
And retail sales. We've got retail sales tomorrow. Yeah. That's about the only data we have out in the US. Retail sales tomorrow. Yep. They're expecting retail sales to be better than previous. So the forecast is a lot better. In fact, it's positive numbers. I don't know. What do you guys think about positive numbers for retail sales? Fake news, or are we going to see them being actual?
I mean, it's coming off of such low base. I mean,
yeah, it's like the bar set so low. Yeah, the bar set so low. It's just like, I mean, I feel like we're gonna overshoot and undershoot the news now for maybe the next month or two.
Yeah.
You know.
Yeah. Well, we got the news coming out on Tuesday. We'll see how maybe that sets up the trend for the rest of the week. But if you go back to the dollar index chart and you look at the dollar index chart right here, because this is definitely for this pair. Dollar index chart is also sort of my backup chart that I look at, and I look at this and I go, okay, yeah, I see a bit of correction taking place right now, but could this just be a correction move? If I go back to the 1 hour, just so that, actually, in fact, I'm going to go to this one right here. Then I'm looking at this and I'm saying, okay, we're trying to get into a trend. We're trading above the pivot point, which is a sign of possible market action being higher each week. So we're looking for price action to move a little higher this week. To stay above this pivot point, and if it does, it's going to chase after these missed pivot point. And I see right trader max, which is a very, very important technical indicator that I use to identify trading opportunities. And so with that, I'm saying dollar index should get stronger this week. Now, could it be the data that comes out on Tuesday, the retail sales? Could that news be positive for us? I don't know. But the technicals tell me right now to hold on to Euro, New Zealand dollar, bullish for this week still, and chase after. I believe the number is 77.40. I believe the number is 77.40 that we're chasing on the Euro, New Zealand dollar. What do you guys think about that? Any comments?
Yeah, here's the thing I like about it. So let's say retail sales are projected to come out way better than they were last month. So that's good. I'm convinced that at least won't be negative for the dollar, right? Yeah. So is it going to be a gangbuster? I'm not sure. I'm pretty sure it's not going to be negative. So that's good. The other thing I like about the trade that you were just showing is we've got a classic crown pattern setting up on that chart that you showed. I mean, that's just a really beautiful looking crown there. On top of all the wave structure, the Fibonacci's, everything that you were looking at on that Euro New Zealand, it's I like it a lot. I think it's a great looking trade. I'm not in this trade, and now I'm thinking about getting in it.
Okay, good. Chris, anything from you?
I think that our tone is pretty much going to be similar across the board. We're looking for Aussie and New Zealand to be probably some of the weaker currency pairs that we see with risk-off trading, and this falls right into line with what we expect. And I think it's a great trade. I mean, I like the levels, and we're trading at 7,500. We had lows around 71, like 71.80 or so, 7,200. I'm looking at the all the kind of range levels you said. What was your target there? 77.40ish, Gary?
Yes.
Okay.
77.40. Yeah. Would
40.
Be
Okay.
My initial target, and then I'll be looking at the monthly target to be the next target up.
Perfect. Yeah, that 77.40, 77.50, and then I would just look at the round number 1.80. I like all those to the upside. Yep, and that crown pattern, like Tyson said, is great.
And for those that there's two products I really love at this point in time trading these type of things, and that is trading the Fibonacci power pivots, which means that if the market stays, let me go to the chart again. If the market stays above this pivot point right here, I'll be looking to buy all upward AB fibs going long. So if it stays above 74.30, buy going long. If I use it Right Trader Max is also a great trading strategy I like to use as well for these trade-based systems. If we stay above 74.30, that's the price. 74.30. If I'm on a 1 minute, 5 minute, 15 minute, anything lower than the 1 hour, I would be buying only above 74.30. If it goes below that, stand aside, wait for confirmation of what the market's doing. But above that level should give us continued trending condition, which is going to be exciting for us to go ahead and continue to trade.
Yep.
All right, good. Well, guys, thank you for your input on that. We got a lot of stuff going on this week. We've given you guys a good heads up of what to look out for, what things to go ahead and pay attention to. You've heard Chris about these pound crosses. What is the approach with that? You've heard Tyson exactly what Tyson wants to do regarding the Aussie US dollar, which is the focus this week on that. Dollar index is definitely going to affect the market reaction this week. Also because of risk of currency pairs that are going to take a little bit of a beating this week. I think it's going to continue. I believe it's going to continue based on the technical analysis. Both Tyson, myself, so all three of us, Tyson, Chris, and myself, are definitely still thinking weaker New Zealand, weaker Aussie, stronger JPY, stronger Swiss franc, stronger dollar. Those are the pairs or these currency pairs that we think are going to move in that direction. So, Chris, you want to give your final words for this week and what trades need to do?
Yeah, I think that we're probably going to be. I'm going to try to make a habit of protecting profits when we have them. If we have, a decent level of expectation, like we're talking about, I'm looking at pound Aussie, pound New Zealand, expecting there to be anywhere from 500 to maybe 1,000 pips of movement. Gary is looking at the Euro New Zealand. That's easily 300 to 400 pips of movement. Tyson, you've got a retest of 6,900, 6,950. I'd love to sell the Aussie dollar back at 7,000. Like hit those highs again, sell it at 7,000, and I'm looking at 6,700 minimum. So, look, I don't care if we retest highs and lows. I'm still going to keep the same direction. So everything that started to snowball last week, I think we kind of had that first real punch to the market, and maybe the market spends the first couple of days like today, kind of clawing back and fighting back and saying, "Hey, we're gonna get back," and just shrug that off. But I think that this risk off, we saw a big jump in the VIX last week. That jump in the VIX to me is a sign that volatility is here to stay. We might not get above 50. We might not have the same drop like we had back in March, but I think if the VIX gets back to 50, then we're going to start seeing daily trading ranges and currency pairs being a lot higher. It's going to be a lot more fun to trade intraday. And so I'm going to try to do my best with traders to be taking good trades and protecting our profits routinely. And hopefully we have a nice clear direction to keep trading. So it's not like we have to turn things on and off and constantly shift directions, but rather have a directional bias and have the ability to take profits off the table and just, continue to pull in gains because, we want to be able to switch gears if things change. If all of a sudden it's like, hey, that like coronavirus is vaccine. Whoa, big vaccine. Like if that all of a sudden comes up in 2 weeks, then what's the market going to do? Tyson,
sure.
Probably be a V bottom, right? And it's like, oh my gosh, I can't believe this is real, but that's what the market's going to do, whether we like it or not. So I'm just saying,
what I think the market's going to do at that point is say, oh, great. Oh, wait a minute. We already priced that in. So
exactly.
Okay.
Yeah.
So it's already here. So
Robinhood traders, you're screwed.
Yeah. Real fast. My quick kind of last statements are this is I think cash is king. Take profits when you can. I think next week, what I'd like to do is I'll come next session we have. I'll come on with my buy levels on stocks that I like. Very few stocks are at buy levels right now. I talked about Briggs & Stratton last week. I'll talk about Briggs & Stratton again this week. The sell-off last week has me not worried at all. In fact, something happened today that's very positive. They were able to pay their interest on one of their bonds, which is a good thing for them. But I have put sold in them. There's only a few stocks that I'm looking at like to actually add to at these levels. Really only two stocks that I'm looking at these levels. I guess 3. First National's getting at an interesting level again. FHN, TAP is at a good level that I like right now, and Briggs and Stratton. Other than that, I want to be in cash. I want to look for better prices to buy. Risk off, I think, is going to be the theme. Probably, I think, until Independence Day. I think until the 4th of July. All this month, I think we're going to be kind of in a take profit, risk off environment. The market's in a prove it to me zone. And so I think people are going to be looking to take those profits. And with that being said, we should see the dollar strengthen, the yen strengthen, the Swiss strengthen. We should see the New Zealand, the CAD, and the Aussie weaken. And that's kind of how we're all positioned. And I'm looking forward to, I think the volatility is going to be good. It's not going to be like it was in March, but there's going to be plenty of profits to be made.
Yep, absolutely. Absolutely. Well, thank you. Appreciate that, Tyson. We'll be looking forward to those stocks next week. Now, my closing today is going to be very, very simple. Get into the trading rooms. You just hear exactly what Chris is talking about, Tyson talking about, and what I've spoken about today. The only way to be able to get the details and get really into what's going on in the market and be able to get into, I like to call it, into the trenches. And I'm going to go ahead and just fix my camera up because it seems to be going away. But to get into the trenches at the moment right now with regards to what's going on in the market, you have to go ahead and pay attention to what's going on with going on with inside the trading rooms. Now, I'm going to go ahead and show you right here. If you go ahead and click onto trading rooms inside Smart Trader right here, you're going to be able to get access to each trading room. Now, there's information about the trading room. You can go ahead and check it out right here. You can read up, listen to videos, and all that good stuff about the trading rooms. But then go into the marketplace and actually go ahead and click on the marketplace. Go to trading rooms right here. There it is, trading rooms. And you can go ahead and get into the flex trading room, which is the Chris trading room, the hybrid trading room, money flow, which is Tyson's trading room. Get access, get into that by going into through the marketplace and get into those sessions. Listen here, in order to know what Tyson's doing with the pairs that he's watching, you have to understand what how he looks at the market and how he addresses the market. Going through the trading rooms helps you to be able to start feeling the same sort of thoughts and emotions that Tyson goes through when he starts looking for trade setups. Same for Chris, how he trades, and same as how I trade and what I look for and things we look for. You're going to learn more. You're going to kickstart your learning process by going through these details. Guys, we love you. We love to give you guys more information about trading. But we want to be able to connect with you, and the only way we can do that is through our trading rooms. These sessions are great, but if you really want to get to know who we are as traders and how we trade, get involved in the trading rooms. We love you guys. We thank you for coming in. We appreciate everyone that's watched the videos, our sessions that we do every single week. We do appreciate that. Once again, smash the like button in this video so that we can continue to do these videos because we just love doing it. So with that being said, have a great week of trading, and we'll see you all back in the next session. The Civic Big Dog and the team saying cheerio.